Welcome to TheTradingMentors.com. My name is Chris and I'm going to show you the QuantFlow Dynamics software in action. And what I'm actually going to do is dive deeper into the market. Go to the 5-minute and 2-minute chart. Even if you want to, you can actually get closer to the market for even more profits, more success, more often. So once we know the trend of gold, we use the 15-minute chart, which is the most common way to do it. And then once we have a clear market structure, i.e. there is price is achieving higher lows and higher highs, then we can expect the price to continue. So what we're looking for in the QuantFlow Dynamics software is we are looking for the price to become oversold in this indicator here in an uptrend. Once we get that situation, we can actually buy it. Don't hesitate, don't wait for anything else to happen, because the price structure is still intact. And if it comes back down onto demand at the same time, then they are the opportunity to get into. But you don't have to rely on the demand areas all the time. And this is how this works. So as the price comes back down in terms of corrections, then we can see here that at this moment here we're going to be buying, no hesitation. The price still has market structure, it's not broken a lower low, and so therefore we can expect the price to go higher at some stage. There's another one there, so if you missed that one, then you can get into that one there as well. So that's how it works. And what I'm going to do now is dive into the 5-minute and the 2-minute to give you better opportunities to get into the market more often. If you want to, you don't have to, you can just use the 15-minute chart. It works a treat on its own. And also notice here there's no indicators on TradingView. I've only got two. I've got the 50 simple moving average high and low. That's all I put on here, which just gives me a little bit of a guide as to, I mean, I can see where it's going, but it just helps me to see this. And whenever the price comes back into the 50, then that's another opportunity to get in on the move as it continues upwards. But don't rely on that on its own either, because there are other trading opportunities. So once you have a clear definition in terms of market structure on the 15-minute chart, and you have a pullback or a pull up, you know, depending which direction you're going. On a buy, of course, you're looking for a pullback, and then you're looking to enter the position on the perfect entry with a perfect exit at the perfect time. Now, it does not mean you have to beat your chart all day long. It doesn't happen like that. You want to beat your chart for a couple of hours, maybe, if you want to trade this way. During the New York session is my favorite personally, or the London Open can be a very good opportunity to get into gold, because there's no actual news coming out during London Open. So let's have a look at this and see what we've got in terms of opportunities. Now, on Friday last, we didn't really see much going on. We had a big pull down out of this area. But let me go into the 5-minute chart just to give you a flavor before I go into the details of this. So what we're looking for here is an opportunity, not only this, but an opportunity where the price moves outside this channel, what I call an outside bar. So an outside bar is where the opportunity comes where the price simply doesn't like it when it's outside. And I can show you a few of these. There's one there on a sell side liquidity. There's one there, oops, and outside bar on a buy side liquidity with a sell power of 72. So for people who've got the reversal charts on the Trading Mentors, you'll know exactly what I mean. We've got negative divergence on a very high probability that the price is going to fall. This is not hindsight. This does not repaint. This is telling you in advance that the sell power is 72. Anything above 60 is very, very strong. In addition to that, we have divergence, negative being in red, indicates that the price is going the wrong way. And then of course we have the outside bar. Outside this channel simply means the price doesn't like it. It's like a fish out of water, literally. It won't last long. We saw that a couple of times here, and we can see the price outside this channel. So the price is going to come back in because it doesn't like it. It just doesn't like it. It has to repack. It's like an elastic band. It's just going to bounce, and it's just going to reject that order block up there. So how can we use that information? So the first thing we can do is we can put the 15-minute, like I've shown you before, beside the 5-minute. That's one way to do it. And then we could, if you wanted to, get closer to the market. So there are opportunities here. We have a buy side liquidity up here at 45.99. So as it comes into the supply zone in yellow, then of course we're looking for sales. We're not looking to buy it, of course. And if it comes back into demand, as it shows here, then we are looking to buy it. So sell on supply, oversupply, and then buy on strong demand. So let's get into the details. If you want to use the 2-minute chart, you can very, very easily. So what I'm waiting for, personally, if I'm trading this way, don't always trade this way, I'm happy to use a 15-minute chart. I will be actually looking for a good entry. So we can see a couple of things here. We can see a sell side liquidity up here in supply, which is what you're looking for. And the first point of call which I'm looking for the price and the candle. Very important, this 2-minute chart. I want the candle to finish below this black line. Very, very important for a sell, and it goes back down into demand here. That's a good selling opportunity. That might not seem a lot, but that's 102 pips. All right. Now, in this instance here, look on the left, look how the price is coming into demand with a buy power of 75. Buy power of 75, very, very strong. And so the likelihood, we're always looking at probabilities, aren't we? You know, this is not an exact science. We are looking at very high probabilities of making a successful trade. Now, these are temporary trades, of course. These are not position trades. These are day trades. And we can see that the price bounced off here nicely and then went up 128 pips. So you've got, what did I say, 102 pips on the way back down, 128 pips on the way up. We've got another one here back up to 114 pips. Now these numbers are not insignificant. If you've traded Forex as I have for 35 years, it takes probably a week to get 100 pips sometimes. It just doesn't happen the same way as commodities. So as I scroll forward here, you can see another opportunity here to the upside, back up into supply. The key here for any kind of market structure is to buy on demand and then sell on supply. That's what you're looking for. If you buy on supply, you're going to have a very wide stop, even if you think that it's going to go much, much higher. And that is not the name of the game. So we can see here as an example, let's give you some examples. I'm waiting for the price to move and finish above the black line. The candle has to finish above it, not below it. And then I'm going to put my stop at the swing low and get 2.71 risk to reward. Now, your risk management is very, very important. The other thing that's vital is to make sure that you've got at least 1.5 or 2 times risk. Sometimes in strong markets you can get more, 3 times, 4 times is acceptable, but not during quiet markets. You can't do it. It just doesn't happen like that. And if you're expecting bigger markets when it's quiet, then you're going to have to hold the position overnight or for a few days. If you're comfortable with that, fine. You know, find your own feet, as it were. So we can see here, let's go back to this position here, where the price came down into a strong demand by power 78. Now this is already set. This is already set before the prices come in. Now I'm not aggressive enough to come in and buy it here. That's not my style. But what I would be looking for is the price. If you look on the 2-minute to your right now as I scroll back, scroll back, scroll back. Can you see how clear that picture is? There's the sell. Buy side liquidity. that is 644 pips. Now I don't expect you to get all of that unless you're holding an open target position. However, and it's unusual to get that in a few minutes, literally, very, very unusual. So don't expect that. If you go for 3 to 1 in a good high momentum day, high liquidity day, then that's acceptable. If you go for 2 for 1, that's perfectly acceptable as well with a 275 pip target. So now once the price has gone down that steep, that strong, it's simply gone too far too quickly. That's what it's happened. So this has gone up too far too quickly outside the channel. This has gone way beyond the channel. You don't want to be buying it here, or buying it here, or buying it here, or buying it here, because the price could simply keep going, and then bounce. All right. So what you want to be doing here is waiting for your 2-minute chart, special settings, and you want to be waiting for the price to finish above the black line. So let's go into a little bit more detail here. Whenever you open a position, you're going to be using the black line as your initial stop. So there, and you're going to go 2 times risk, 308 pips. Let me do that again on a short side. So you are going to be putting your stop above the black line, somewhere around there, because what you want to make sure at the point of entry is that the price is never going to come below that black line at the initial stage. The price is never going to come back up, and you don't want it to come back up. And so we can see this in several situations. Here as an example, I don't want the price to come down and move back up into that black line. I want it to stay below it. Does that make sense? Hopefully that makes sense. So again, here I want the price at the initial entry point to stay above the black line. So I'm going to have quite a relatively tight stop with a 2 to 1 risk to reward. 2 to 1 is acceptable in any circumstances usually. 1.5 is fine. Whatever your thing is, stick with it. Do not change the plan of action. Your trading strategy is your trading strategy. And if you change it, then you're changing the goalpost from, this wide to, this wide. You get my point. So don't change the goalposts, in other words. Stick with the trading plan. If there's a new trading plan to you, then try it for 30 days. And if you make a ton of money, then I would not be surprised, because you've stuck with the plan, the trading plan, which works for you. Now again, you don't need much time. Time is special. It's the most valuable asset we have, is time. And that's why I'm not on my charts all day. It's just not my kind of thing. So yeah, just a reminder what we're looking for. 15-minute chart. Does it have market structure? Number 1. Has it pulled back to any significant levels? A nice correction in a clear uptrend on the QuantFlow Dynamics software? And does your 5-minute agree with you? Has it come outside the bar here, outside the channel, outside bar? And is it likely to probabilities is what we're looking for. Is there a buy side liquidity up here, or is there a sell side liquidity down there? And then entry point, you're looking at the 2-minute chart. If you want to use the 2-minute to gain entry above, on a buy above the black line, special settings, wait for the price to move and finish above the black line. And the last thing is, notice this here, I don't need to tell you probably, you want to see all the buyers stepping in at the point of entry, or at the point of entry on a sell. You want to see that all the sellers are in, or the sellers are in. Now this is not chicken feed. This might look small numbers. These are hundreds and hundreds of pips per day. Literally, you can make 500 pips on a good day quite easily. So the QuantFlow Dynamics software is available in the description, in YouTube description. There's a link there, and you'll be talking to me, and I will be your mentor for the next 12 months if that's what you want to do. Have a brilliant day.